Hello and welcome to another edition of 4 Minutes, proudly brought to you by Bennelong Funds Management. This week we take a look at an unprecedented increase in financial planning practice sales over the past year. Take a look. Stephen Prendeville from Forte Asset Solutions said the company saw a 100% increase in the number of businesses on the market in the last financial year against any other period in the past 8 years. There is still a high demand for books of business that can be easily incorporated into an existing practice. Also on our front page this week, FOFA responds to claims by legal experts that it will be swimming in the dark after FOFA is introduced. In other news this week, research by Hayes Recruitment found financial planners are still very much in demand as the industry continues to battle talent shortage. The report stated the talent shortage was a result of fewer planners entering the market in 2008 and 2009, when the industry's reputation suffered. Snowball chief Tony MacDonald will depart the company in October 2012 as part of its integration with Shatforth. Until then, MacDonald will focus on integration and related activities as well as managing the responses to FOFA. Meanwhile, NAB has announced the appointment of Dr. Ken Henry to the role of non-executive director. SMSF Association SPA has called for the government to increase the standard concessional contributions cap to $35,000 for those aged over 50. SPA chief Andrea Slattery said the ATO has collected $300 million in excess contributions tax since 2007, making the change more urgent. IOOF's takeover of DKN has become official last week, with the proposed acquisition receiving approval from the Supreme Court of Victoria. Guardian Financial Planning changed its name to Guardian Advice as the group marked its 10th birthday this month. Executive Manager Simon Harris said the group will reposition itself as a risk-focused boutique, planning to grow its advisor numbers from 150 to 200 in 3 years. Perpetual has announced it will outsource its administration services for private wealth clients to Macquarie Investment Management, to be launched in 2012. Perpetual Head of Retail Sales Jeff Lloyd said the company's decision to outsource to Macquarie was part of an overall move to increase the group's focus on high-net-worth financial advice. A shadow shopping exercise by Core Data revealed cost was the biggest barrier to the greater take-up of financial advice. After seeing an advisor, more than half of shoppers thought the proposed fees were too high, although a vast majority felt advisors could improve their financial well-being. Praemium's restructure will see the company save $2 to $3 million in ongoing years, but will incur a one-off $1.5 million cost this financial year. Financial Planning Association Chief Mark Rantel addressed a tax forum last week, calling for the government to amend the tax system to help Australians build their retirement savings. Meanwhile, the association revealed its advertising campaign launched 3 weeks ago is gaining online traction, with a 20% increase in its Find a Financial Planner tool searches per day. And finally, Australian Super will launch an online financial advice offering for its members, which the industry funds said would help people self-start their super. For all the details on those stories and more, make sure you pick up tomorrow's issue of Money Management. Thank you for joining us this week. Bye for now.